Hey there, this is Christian Fromhertz, CEO of Tribeca Trade Group, with your end of day recap for Monday, and a little bit of a wild day to start the week for Monday. And I'll talk about U.S. markets, but I know international markets are always overlooked, especially just in the financial media. So I know I've been talking about them in great deal, but first thing that we saw this morning, going to just start from the beginning of the day, I guess. And these are the areas that have really outperformed year to date. Hang Seng's up 10% year to date. The India, the Nifty 50 is up almost 13%. Also looking at some of the other areas just across the globe, all the Asian markets are really up very nicely. The Kospi's up 7%. So first thing we saw last night is, of course, I always look at first quarter performance just to kind of see what were the outperformers and so forth. And it looked like, we're going to have some continuation here, and basically you never know how long the trend is going to last, but certainly these are all uptrending. And last night it was more of the same, more outperformance. The Hang Seng was up 60 basis points. India was up 70 basis points. So this outperformance continues, especially when you look at what happened in Europe. Europe also was had a little bit of volatility, like the U.S. market today. They started the day, they were kind of mixed, and they sold off. Euro stocks were down 80 basis points. The DAX was down about a 0.5%, and Spain and Italy were also down over 1%. So a little bit of red there, which added to the mess that we had this morning, which was, everything looked pretty okay when we started the day. Looking at S&P futures, we again seem to be doing this quite a bit, where we either get into the value area and just get completely rejected there. So the blame you could throw upon the auto companies this morning. They all announced just terrific, sorry, horrific, not terrific, um, results for auto sales for the month. We started to see that with Ford. They estimated down 7.2%, which was worse than expectation. Nissan was okay, but you look at Honda. So it wasn't just the U.S. companies. And GM, for example, was up 1.6, estimated to be up 7%. Honda was down zero point 0.7, estimated to be up 5%. So this went so on and so forth with Toyota, also sales down 2.1%, estimated to be up 1.2. So it just wasn't one or two companies, but all of them across the board missed really bad. Not all. There was a couple in there, obviously, that were okay. Fiat Chrysler was another one that was really bad, down 5% versus zero point 0.4. Tesla obviously had some really good news, which everybody was bulled up on Tesla and making fun of the short sellers in Tesla today. I am long a little bit of Tesla, so I was enjoying that today. But that was the big shock to the market, and then it becomes the second or third derivative of the move. When you think about how bad those auto sales were for the month, then you start to really go after who is this really going to affect? Well, it's going to affect the auto suppliers, anybody who makes anything going into a car, including chip makers. So even NVIDIA was getting hit today because they do make some chips that go into, especially the automated cars. But everybody just starts running to say, to kind of shoot first and think later in terms of who's going to get hit. So if you look at some of these companies like LEA, they really got smoked. They came back a little bit towards the end of the day, but Orly, basically just anything. I actually, and back in my Merrill days, I actually created. Somebody asked me today in the trading room, do you know of an ETF for car parts? And I'm like, that's funny. That rings a bell because back in my Merrill days, I actually created this index because there wasn't an ETF out there. This is all the companies that go into making a car, the components of a car. So you could see the components, which is Goodyear and Lear that we talked about. Also, some other names like ST is in here. So here's a good list of names that could really get affected by, or that got affected already today. BWA was down 3.5%. I talked about NVIDIA a little bit. It's a couple other of the chip makers. They actually, I think people kind of came to their senses around the middle of the day. Again, volatility, a lot of red candles here. Found some support right around 107.40, but notice that we kind of we rallied back. But you're going to see this in a lot of charts that I go over today. That they just couldn't get in, they couldn't rally into value and recover all of the down move. So, these value areas, why I have them on my charts is because they just act as great support and resistance levels where buyers and sellers have met up in the past. That often acts as resistance. In this case for today, support as well. So SPYs did come back quite nicely today. If you look at the S&P chart, we finished almost basically virtually flat on the day, down 17 basis points. It looks like we sold off a little bit here at the end of the day, but again, really no damage done in terms of SPYs. Same thing with the Qs. You have kind of a floating hammer bar for today, so we kind of bounced off that trend line again in S&P. So we're kind of sitting right at where these two moving averages are. I would say the next guess, or you could guess which way we're going to move next, because we're sitting right between these two moving averages. I really think it could go either way. The support level that I'm watching, I could bring SPY because I know more people look at SPY than S&P futures, especially on the retail side. But 234.41 is your support. So I really am not making any rash judgments here about the market. I understand, there was a lot kind of built into, and pretty ugly when you think about it, when all of those auto companies just did really badly. But I would watch support 234.41. We failed to have this crossover. The yellow line crossing over the blue, moving average crossover. We still have not seen an MACD crossover yet, so the trend hasn't really changed. It's nice that we bounced last week, but no real major change as these started to cross over, but have not fully crossed over yet. So that's so you have to honor that, and until we have some type of momentum change here, we're still in this downtrend move. So support 234.41. That's just S&P. Qs and small caps are going to look much different. I'm going to talk about small caps. They were really interesting today. What happened to them today? But so Qs, basically flat for the day. As I mentioned in last weekend's video, stick with the strength right now in the market, and your support is 131.80. You can continue to be long Qs against that support and to buy them on dips right now, as long as they don't break the uptrend. So that's the I don't have a term for, I guess, for the SPYs, but the Qs are definitely the good. The bad is IWM. They did not recover much at all today. The little recovery that happened today kind of got thwarted. I'm just going to move to small cap futures because this is the first thing that I noticed today. When I look at the the averages, I noticed the small caps were kind of bid up this morning, and they were up about 45 basis points. Look at this. This was the telltale sign for me this morning that I saw, and I actually sent this out on Twitter, was that we got up to the top of value on the 5-minute bar and failed. Failed to break out, and then also I really upset at myself because I didn't capitalize in shorting small caps today. I always try to share when I make a little bit of a mistake or something that you can learn from, but I have a little bit too many positions on right now. There's been a lot of positions, a lot of action on the tape that we saw last week that I liked a lot. So, I'm kind of like is almost full to capacity with positions, which makes it difficult, when you're managing your positions and when you have a little bit too many on that you're managing in the first 15 minutes, sometimes you miss what the major market move is for the day. So this happened really quickly. So you had to really be paying attention and not so much to managing your positions, but failure to break above and a break below. This is a great place to short using value areas, and we never looked back. Sometimes you get a retest, but we didn't, and this went from being positive to down 1%, and you could see still never really rebounded like the Qs and the small caps. So interesting. Why I think this is was really intriguing today, because we did this on multiple time frames in the small caps. Look at the 1 hour. Every time frame has its own value area. The hour, the 5 minute. Basically, the hour encompasses the whole week of last week. So the you can see in the gray here. I think that's the gray, I would say. But you could see the range of prices, and we touched the top of value. And again, just like on the 5 minute, which is Friday's value area, we failed to break above and completely got rejected there. Then, if you back it up one more step and look at the daily chart, I mean, I don't think I've ever seen that before, where we actually hit resistance on 3 different time frames, and all that resistance kind of lined up together, and sometimes that's more powerful. So that's for today. You look at the daily chart. you know, is it end of story or lights out for small caps? No, I would say we're still in this value area, and we're inside of it. Unfortunately, I was thinking pre-market that we had a good chance to kind of break above. Certainly, that did not happen. And respecting these value areas is the best way. You can kind of think about what happens, or try to make a prediction. But predictions, are just that, are market predictions and forecasts, which are very, most of the time, irrelevant. So looking at your support and resistance levels, noting that we were unable to break out, that's good enough for me. So now we're kind of back right into the middle of the value area, into chop. So I don't think it's game over for small cap, but certainly not the best sign to see them fail to go higher after we saw some outperformance last week by small caps. Just a couple other charts and just to kind of recap today's option activity. Lumber liquidators. This was. I love it, and we've been able to do this now several times. We heard a lot of people today talk about, wow, the lumber liquidators order was so great in the calls. Well, guess what? We put this trade on Friday, before that action even came in. So this was something where we had talked about this chart. Pat Harris, who works with me, actually said, hey, this chart's kind of interesting, and we kind of spent some time on Friday and examined it and said, hey, this is a great move from a long base. Let's see if I think I need the 2-year chart here. But a really nice catch that we found. A nice move above the 200-day moving average, and a nice move above this range. So while everybody was kind of jumping up and down about it on Twitter today, we caught this trade on Friday. So we do this a lot. We get in before the aggressive option activity because the charts provide the signals. And obviously somebody was probably looking at the same thing that we were and said, wow, this stock looks like it's ready to pop. So that's why we do our homework, and that's the research that we find. So if you're not a member of Tribeca Trade Group, I can't give you more of a of a reason than the amount of research and chart studies that we do to get in before you actually see the orders on the tape. So that was great. And other orders that we saw today, Visa. This is we saw a lot of calls that traded last week in Visa. I actually added to my position this morning on the weakness. Sometimes you could really trade around these positions that where you see aggressive call activity. So nice hammer bar today, and they went after him today again. The total volume was 12,000 of the May 90 calls. So for whatever reason, somebody really likes Visa. I like the chart. I think it looks good, and I'm long that name. I added to it in the beginning of the day, and actually took off a little bit of the add-on position. So I'm kind of right back to where I started in the beginning of the day. Starbucks continues to see call activity. And that's been moving up since the 200-day moving average. Some nice. This was short-dated call buying today, I believe. Yeah, it was weekly stuff. eBay, another name where we've been seeing repeat call activity. 21,000 of the weekly 33 calls. If you're looking for like a long shot or a lotto, maybe lotto is the right term. And something short-dated. Obviously, you don't have to do what they do, which is always the case. You never have to trade what the aggressive option activity is. You could go out to whenever you like, or you could just buy stock. But has been buying a lot of weeklies. Just a couple other names. JD.com. They tagged these too. The China internets kind of have been following the activity in the Hang Seng. JD.com, they came in a couple times, opening trades 5,000 and then another almost 4,000 of the May 32 calls. You could see the second trade that they put up. Here's the first one. Second one, they paid more for it, which is often an indication that they definitely bought the first time around. But another name that has been chopping around since earnings, and looks like it wants to make a higher move. So real nice move today for JD.com in a week tape. What else? A couple other trades. Amazon, Amazon had a real nice week last week. Not a bad day today, considering the week tape. Up $5, up 0.5%, and looks like it still wants to go. What else? Tesla, we saw a lot of call buying in Tesla. Obviously, you probably know already about the move in Tesla. Nice volume, nice breakout. I am long just a little bit of Tesla, which I'm, like I said in the beginning of the video, happy happy about that one. What else do we have today? HDP, another name that I'm looking at to put on in cash. This name launched higher after some front month calls went up, some April calls. But take a look at this name, a name that used to be around 25, $30. We can zoom in here. The only thing I dislike about the chart is that the 200-day moving average is sloping down. But you could use the 50-day, which is the purple line, as your stop price, and basically go long against that 50-day moving average in HDP. This is Hortonworks. Provides enterprise data platform. So I like that trade. I did not put the trade on today. I just wanted to kind of see how the volatility was going to go through today, but I think with that kind of chart may have a little bit of time in that one. And then we saw a lot of put orders as well. ETF orders. EWH. This is the Hong Kong ETF. People sometimes ignore this ETF, the Hong Kong ETF. People focus on EM and FXI, but EWH is just straight Hong Kong. Pretty nice amount of volume. I just keep mentioning how well Asia shares are doing versus the U.S. So there's 21,000 of the May 20 calls that went up today, some of which went up on the bid side. Notice I don't think there was any major open interest with that. Where's the open interest? I can't see it this time of day. Open interest 0. So a total, again, some went up on the bid side, but I think that those were bought considering the performance of what and the chart of EWH. I don't think anybody right now is looking to fade this move, but that's just me. As you can see, it's now getting above this area. So in any event, that's a longer video than usual, but a lot of action today. So there you have it. Thanks for watching the video. Have a great night, and I'll see you on Tuesday morning.